stocks snapped back today in the hopes of easing trade tensions between the U.S. and China. But the big question, what does this mean for you at home? Financial professional Brian Levy from BML Wealth Management joins us now to help break it all down. Brian, thank you. We just heard about the jobs and the ports, but what about others, the average person on the street here? How will this affect them, and when do you expect us to start seeing that?
Yeah, so I think we're watching two things right now. One is what the ultimate effective tariff rate is going to be, which we don't know, and the longevity of those tariffs. So how long that's going to last. The other thing that we're going to look at is the response from the companies themselves. Are they going to eat it and take less profit, or are they going to pass it on to the consumer, which ultimately leads to higher prices? And just like they said in the last segment, it's the uncertainty that's causing the issue right now.
Right. If you were a betting man here, do you think they will eat it, or do you think ultimately consumers will pay for it?
I think at the end of the day, and it's going to depend on the product, right? So, but I think at the end of the day, it's probably going to be a combination of the two. I think they're going to pass some of it on to the consumer. They're probably going to take some of it. So corporate earnings are going to hurt. And that was one of the good things going into the year last year or this year, is that corporate earnings were doing so well until obviously the tariffs came out.
We've seen so much volatility in the stock market. For people who think, hey, I don't have stocks, I don't invest, this doesn't affect me, what would you say to them?
I would say a couple things. One, as a retirement planner, we see this all the time that, people are concerned. Should they contribute to their 401k still? What should they do during this time? And I would urge everybody out there, as long as you're not right up on retirement, that recessions, we hear this word, we fear it, but half of recessions, the stock market is positive. So that's a good thing. The thing you should be thinking about right now is diversification and reassessing your risk and determining, hey, if I am close to retirement, do I have the appropriate amount of money in conservative funds? And do I have the appropriate amount of money in growth funds or risk assets? Because ultimately, that's going to determine what happens to your investments. And we've been lulled to sleep for quite some time, and now sort of we're feeling it now. So it's really just a good time to take pulse on your current situation in your 401k. It's a great time to talk to your planner.
A lot of people have anxiety, whether it's the market, Wall Street, that market, or going to the market for food and things like that. How much longer can the U.S. deal with this? Can people here deal with that sort of anxiety?
I think not too much longer. When you read a lot of the reports and the analysts, the biggest thing is how long does this drag out? You were talking about the ports of LA. My brother-in-law works for a major shipping company, and he's saying companies are holding product overseas until they figure out what's going to happen. And ultimately, that may create a bottleneck like we saw in COVID. There's a lot of things that just the wait and see approach that corporations are doing is going to ultimately affect consumer confidence. It's going to affect spending. It's ultimately going to affect the economy and the growth of the economy. So my hope is if tariffs land closer to the 10 to 15% rate, I think we'll probably avoid a recession. If it goes to that 20, 25%, we could see a recession. But to your point, the longer this drags out, the more challenging it's going to be as we move forward.
Brian Levy, we certainly appreciate your time this afternoon. Thank you
So much.